Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? All right, gold and silver continuing to move upward in a nice pace. Are we going to see prices really jump up in the summer? That's very possible. There's an interesting article that came out. It's supposed to be the blueprint for how people could break away from the U.S. dollar. Once that happens, obviously what you're going to see is the U.S. dollar lose a lot of its power. Country's been talking about this for a long time. Is this the time and the place for that to finally happen? Have they finally grown a big pair of cojones to go ahead and challenge the U.S. and their dollar supremacy? We'll get into that here in just a moment. Before I get started, if you can hit the thumbs up button, I surely would appreciate it. As you are well aware, it helps me get past the YouTube algorithms. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. Right now is a phenomenal time to be owning gold and silver, or any other precious metals for that matter. And when you go to buy your precious metals, give a consideration to our friends over at Money Metals Exchange. The link is down below in the description. If you are a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you will get a free half ounce of silver. So Saudi Arabia about to sell its oil in yuans as well as rubles and rupees. That's the talk. This is breaking ranks with the United States. That's for sure. Looks like cryptos are moving in the green again. Yep, that'll just tease you, won't it? Bitcoin at $40,544. Ethereum still above $3,000 at $3,040. XRP's at 79 cents. Solana's at $101.39. Cardano's at 95 cents. Avalanche is at $77.27. Dogecoin hanging around that 14-cent mark. Polkadot's at $18.36. Shiba's at 4026. Polygon is at $1.39. Crypto.com is at 40 cents. And for the most part, all of the cryptos riding in the green with a couple of exceptions. Come over here to Satama. It is at 8072. Over the last hour, it's neutral. Over the last 24 hours, though, it is negative 0.8%. Over the last 7 days, it is negative 23.9%. Over the last 14 days, it is negative 42.5%. And over the last 30 days, it is negative 41.8%. This is the weird thing about Satama. You always get these spikes. It's running really good, and then all of a sudden, a huge drop. A huge sell-off. So somebody is tampering with Satama. Silver's looking really good. It ends the week at $25.66. Slowly but surely creeping up to that $26 level. As for gold, it ends the week at $1,974.20. A nice little spike going in the right direction to end the week. Precious metals in general are going to do phenomenal. There is a shortage everywhere. A lot of people are curious to see what it is exactly that Putin is going to do on June the 30th. That is a deadline. We're curious to see where he's going with this. Speaking of, here's an article that's very interesting. Here's the playbook if the rest of the world breaks free from the US dollar, says Credit Suisse monetary plumbing guru. So what are those plans exactly? It's pretty well accepted that no one knows as much about plumbing of the world's financial system as Zoltan Pozsar, global head of short-term interest rate strategy at Credit Suisse, who was the point person on the market developments for the senior U.S. officials during the 2008 global financial crisis, and has mapped out the shadow banking system. The mechanics of the financial system are a type of thing you don't really have to think about until you do when there's a breakdown. The issue is it's been breaking a lot. Pozsar's telling 3 times since 1997, most recently in 2019 when the Federal Reserve briefly lost control of the overnight interest rate market. And Pozsar, as well as other experts, thinks the U.S. sanctions on Russia marks a momentous shift since the largest commodities producer in the world has been put in the penalty box, and they are commodities producer. The Treasury Office of the Foreign Assets Control, he says, is a far more powerful than either the Federal Open Market Committee or the Financial Stability Oversight Council at the moment. The state does what the state does, and the FOMC will have to clean up the inflation that comes next. Without price stability, there is no exuberant privilege or dollar supremacy, says Polzer. He says it's rational to ponder whether China will revalue the renminbi versus the dollar, and whether Saudi Arabia and Hong Kong will abandon their pegs. After all, if former Treasury Secretary Larry Summers is right and the Fed will be forced to hike to close to 5%, and if we are right about the relative decline of the foreign exchange value of the US dollar, why would anyone shadow the U.S. hiking cycle and crush domestic housing and suffer a spike in their living costs due to the peg that no longer makes any sense? So what he's saying is, look, there are countries out there that are pegged to the U.S. dollar. So whenever the U.S. dollar goes up in value, their currency tends to follow. When it goes down, it tends to follow. But the prediction on where the dollar is going to crash, it just makes sense for people to unpeg their currencies away from the dollar and then just watch their currencies go up in value. The Iraqi dinar is a perfect example of that. Money, he adds, can't buy commodities in a time of shortages, and there are shortages of commodities. But countries can choose to revalue their currency if they've been suppressing the value, or rethink their FX pegs with an eye to maximize the commodities they can buy in a world of shortages, he says. And again, back to the Iraqi dinar. So what's his playbook? If you can't use quantitative tightening or hike your way out of inflation, then some decline in the US dollar is inevitable. And shorting US rates, the US dollar, and some FX pegs makes logical sense. It should be noted that the US dollar has, despite the critics, struggled during the Russian invasion in Ukraine, and on Tuesday released its highest level versus the euro in more than a year. An expert plumber doesn't necessarily know how to build a house. So Polzer, on top of all the other experts, are anticipating the decline of the dollar and is suggesting to those countries that are pegged to the US dollar, if you want to free yourself, now is the time. Break the peg, because when the dollar goes down, why should your country's currency go down in value as well? Remove yourself off of being pegged to the US dollar, let the US dollar do its thing, and then allow yourself to revalue your own currency, which I know most of us are hoping to see the Vietnam Dong as well as Iraqi dinar do exactly that. So some great opportunities for Iraq to really strengthen the Iraqi dinar. First, unpeg yourself from the US dollar. And then second, turn around and move it to the gold standard and demand people purchase your oil as well in the Iraqi dinar. That would do wonders for the Iraqi dinar. Anyways, you guys let me know what you think. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I catch you later. I'm out.